Well, the stock market experienced one of the greatest declines ever since the 1987 crash. At its worst, the S&P was down about 26% for the week. Markets then went up sharply, higher on March 13, 2020, around 9.2% on most of the indexes. Pretty incredible. However, before you start thinking that this means that the market decline is over and the stock market is about to go up again, you're probably wrong. It's not probably going to go up immediately. I can't predict the future, but stocks are likely to sharply move lower. If you want stocks to go up again, you need to smash the like button. Anyway, there does appear to be an absence of liquidity and the extreme volatility is continuing, and those are signs that the stock market is unlikely to resume its uptrend anytime soon. I know many of you might want to say, "Look at how cheap the stock market is. I want to put all my money in right now." I think that is mistaken. The truth is that when a bear market begins, it does not end right away. The average bear market lasts 14 months, and the average loss is around 33% on the S&P. Right now, the S&P is down 20%, so we're not even near the average loss in the bear market. The worst bear market in history cut the S&P in size by 60%. So when I go online and I see people really excited about getting into the market, it kind of scares me because a lot of these people are a little too excited about getting back into the market in bad conditions. The truth is, when the bear market ends, a lot of people are not going to be interested in getting into the market again. A lot of people are going to be extremely demoralized and think that the stock market will never go up again. That will be a time period when the market will resume like you've never seen before. One reason people are kind of unprepared for a stock market crash and bear market is because the last bear market was in 2008. So that was 12 years ago. A lot of new investors want to jump in right now, and I think that is the wrong time. The major reason why is because the volatility and the massive declines we are likely to see are really going to be rough on them psychologically. When your first investment goes down so fast, you're going to think that you are doing something wrong, when in reality, all this means is that this is just a very tough environment. I also think that this is just one of the toughest environments for most people just to pick individual stocks. Some individual stocks are going to go down way worse than the averages and the indexes. We are down 20% on the indexes, yet some stocks like Macy's are down 70%. So please be careful. Also, it's important to note that some stocks have not even recovered from the last 2008 crash, such as MGM and Bank of America. So just because you bought something cheap does not mean that it's a good deal or that it will come back. Cash is not trash. Cash is the safest place to be right now. So with that said, be sure to hit the like button and subscribe, and we'll talk to you in another video. Feel free to also ask any questions or concerns you're having with this latest stock market crash. I always love hearing feedback, and it helps us understand what is on your mind too. See ya.